somebody asked me not too long ago, what's different about what I do? And I said, well, and how I do that. And I said, well, it's not how I do it. I don't do any of it. I mean, I really don't care much about the markets because a good, strong market is going to follow an economy. And so my goal was always to understand and to get a grasp on forward thinking of the economy, because the markets may not follow immediately, but trust me, they will follow in the bad market or in the good market. And the evidence of that, in case anybody's wondering where the evidence of that is, it would be the last 3 years of the Trump administration. So the idea of understanding, and I wish more analysts and more financial advisors did that, and they really can't. They don't have time. I get that. I understand that, and I'm sympathetic of that. But nonetheless, you know, they have economists maybe in their firm that are doing that for them, and that's fine. And most of them are all doing the same thing. Most of all those economists are doing the same things and following the same trends and the same kind of things, which is usually just only about 99% of the time. They're in direct, just polar opposite of where I'm coming from on those things. I'm not saying they're wrong and I'm right. I'm just saying that's where they are. They're in one place. I'm in a very different place. And I don't like being against all that grain, but it just is.
Yeah.
I'm not
Well,
sure
you know,
why.
I tell when I bring on new clients all the time, I tell them what all we're going to talk about, what all we're going to address, because, and of course, the first meeting is all about risk and finding the right, kind of portfolio that's going to meet their risk level. But, what good have you done if you've achieved a great average annual return over time if you haven't done anything to address the other risks that you're going to face, which is what you talk about all the time, the future of taxes and the future of regulation. So, so what if you've made this great annual return, but you lose 20, 30, or 40% of it to taxes or regulation?
Yeah, yeah. All those things have to be considered and should be. And so I probably tend to only look at that. And I look at economics too, the global macroeconomics and here in the U.S., because that's where we get our insights. That's where I get it. And people say, how do you have all these insights? How do you know this? Or how do you come up with that? It's because I'm looking at a much, much bigger picture than the vast majority of people out there. It's the only reason. It's not because I'm smart. I'm just taking the time to look at all the things that need to be looked at that nobody's looking at. Maybe they don't know how to get it. Maybe they don't. Maybe it's just not something they feel comfortable with. Whatever the reason, but I'm watching the global markets very, very closely right now, particularly this Pacific Rim and the Eurozone. So, I watch that because years ago we didn't do as much of that because if America got a cold, everybody else got the flu afterwards. But that's changed, and that's changed dramatically. And right now, I'll give you one example of that I was digging into this morning. Deutsche Bank coming under fire once again. It's a very, very weak bank. They are plagued with problems that frankly are insurmountable. And they just keep getting covered up and pushed aside and bailed out over and over again. They're the largest bank and the largest economy in the Eurozone. So, when you see these things, and it's a constant, it's never ending. It's one thing after another. And so when I start hearing, as I did last week, about something that is erupting once again in Deutsche Bank, it's like, my gosh, it never ends. But why is that important? Because if their derivative markets collapse, we're done. We're done. Well, yeah, but that's in Germany. We're all the way over. No, we're done. Banking and some of these financial institutions are very much like the oil markets. It's so much a global market right now, more so than it's ever been before. So things may look really good here while that's crumbling, meaning that crumbling is going to come in a heartbeat to America at some point in time and to our markets. So they're the kinds of things that, I'm always, we've got to be conscious at. We got to have a big, broad picture of so many things. And with that always comes different regulation or different tax structures that are going to be meaningful to the way companies operate and respond to the economy that's going to impact their stock price. So anyway.
Yeah.
Too much weeds there, deep in the weeds, but
well, and I know you've been saying that. I've been following you for 8 years, and I know you've been saying that at least since then.
Yeah, forever. Yep. Yeah. It hasn't changed, but the benefit that our ministry brings to the table, probably, if there's one thing, is that we're not afraid to say it. If we try to be like the pack and only giving people what their itching ears want to hear so that they will be more receptive to working with us if we only did that, then we wouldn't be as effective. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.TV. That's FISM.TV.